Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Wednesday, September 4th, 5:53 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, the financial capital of the South, with tonight's Revere Roundup Daily Market Insight video. Market state, we're in an uptrend. That uptrend is hanging by a thread, and we need to hold S&P 500. The S&P 500 needs to hold at the 5,500 level. Key level coincides basically with the 50-day moving average. It acted as resistance and support over the last couple of months on the left side of the chart. It needs to hold as support now. Otherwise, I would guess we're going lower. Check the trend gauge over here. Mixed bag. Leaders neutral with the red sub arrow. They just uh, really got taken apart yesterday, along with the market, and put us on the brink of a harsher correction. But as I said, as long as the S&P holds, and the reason why it's holding is because money's flowing into the value sectors. All rotation takes place within the S&P 500. It's very difficult to keep up with all that rotation unless you do like we do and keep a core holding in the S&P 500 and then determine the overall market health, especially in growth stocks. That's where we can find the best outperformance in a strong bull market. Not really finding it now. We're down to just quarter positions in three stocks and a half position in one. But we maintain our core position as long as we're above the 50-day moving average. If we break that, we'll start chopping that, as we did take some of it off, breaking the 21-day moving average. So the short-term trend very clearly mixed. NASDAQ 100 bearish, mixed bag, mid and small, and S&P trying to hold on. Two closes below, but right below the 21 is the 50, and that's holding. Dow still firmly above. Uh, Bounced again at the 50-day with the S&P today and the mid and small cap indexes. NASDAQ 100 has broken that level. So green arrow there still, but the yellow sub arrow indicating the weakness, and this will quickly go to neutral and red if we break that 50-day moving average on those three indexes. Market has a way of finding support if it needs to at key levels. Sometimes the more obvious it gets, however, uh, it can break. The more times you bang on support, uh, the weaker it gets long term, and the market never gets into serious trouble unless we break the long term 200-day moving average on the indexes. So what happened today? Coming off of just a really terrible day yesterday with the S&P down 2.1%, NASDAQ 100 down 3%, small caps down 3.1. We were looking for any type of support. 5,500 did hold, as I said yesterday, but overnight gap down. And would we find support? We did. We actually made a low in the first 5 minutes. So the same way that we look to what's going on with the opening 30-minute range, that can be bullish or bearish. So making a low in the first 5 minutes and it doesn't get broken, that's bullish. However, that low did start with a gap down, so we had a lot of work to do. We did have a shakeout at 10 o'clock with some JOLTS data that came out. We rallied late morning into after 11 o'clock Eastern time, and then chopped with a downward bias, giving up that whole move up early morning. But again, we found that support at that 5,500 level, and we bounced into the close. So very key, as if I can't say it too many times. But that's the level that we're watching. Before that, we were watching 55.60 to 55.66 for support. That was broke yesterday. We tried to rally back into that today, and it looks like that level may be acting as resistance now, and it's coinciding with the downtrending 21-day moving average on the S&P 500. So that's certainly not helping. So more bad than good, but we do look for the good for signs of a bottom being put in when we're pulling back. So here are the numbers on the day. The 21 over 21 list down a little less than 0.5%. Mixed bag, 8 up, 2 neutral, 11 down. The big 8 doesn't look like a whole lot went on, just barely positive, but Tesla was up 4.2%. Meanwhile, Nvidia and Amazon were down 1.7%. Apple down a little less than 1%, so a mixed bag there. Mixed with the RG8 as well, down an average of 0.07%. S&P 500 gap down 0.35%. Was green as much as 0.5%, pulled back, bounced, ended up down 0.16%, equal weight, about the same. NASDAQ 100 gap down 0.7%, rallied, then faded, but nowhere near the opening zero point 0.7 gap down lows. Ended up down 0.25%, equal weight, however, down 0.5%. Dow positive by 0.1%. Mid caps down 0.3, Russell 2000 down 0.2, Global 60/40 basically flat. Our flagship portfolio, GROTECTION, down 0.14%. Our beta now below 1, this being below the 21-day moving average on the S&P 500 and the weakness in the NASDAQ 100. So let's get into the charts. We'll start with the S&P. Here you can see obviously the ugly down bar yesterday. Much smaller range today, but trying to get back above that 21-day moving average, which is now at 55.38. We briefly poked our head above it. The high was 55.53, so somewhat near that 55.60-ish level that we had been referring to. The 8-day has rolled over and is coming down, so really need to get back above that 55.60-ish level in order for bulls to even say that they're in any semblance of control. We're flattening out on the 50-day. That's not good. That the indexes provide more support when the slope of the moving average is trending higher. And we're basically starting to roll over on the 21-day moving average as well. So the check marks in the negative column are piling up. But we don't want to throw the baby out with the bathwater. There are a handful of stocks that are acting well that have leadership characteristics, but the very growthy, higher beta ones came apart yesterday, and some saw feeble bounces today. So there's the S&P 500, NASDAQ 100, the worst of the 5 indexes. 21 never got back above the 50 during that move back up, and now it has rolled over, and the 50-day has rolled over as well. Very clear that this topped on that CPI report back in the second week of July, and we've had relative weakness on the NASDAQ 100 ever since then. Dow Jones Industrial Average, relative strength over the last 2 weeks, holding above the 21-day moving average. Very clearly the most healthy of the indexes over the last couple of weeks. S&P 400 mid cap broke the 21, 2 closes below the 21, but held the 50-day moving average, so that 3,000 level, pretty key there. And the Russell 2000 small cap, another second close below the 21, but holding the 50-day moving average. That's around 2140-ish. That needs to hold. Let's go to really the strongest looking of the index. That's the equal weight S&P 500. Still above the 21, but struggling at the 8-day, and the 8-day is rolling over as well. Note the relative strength over the last 2 weeks. Very similar to the relative strength line of the Dow Jones Industrial Average, as we've seen money flow into big cap value sectors and out of big cap growth. Actually, it hasn't just been big cap, it's been across all market caps that the value sectors have been leading the way. Let's go to the VIX. Ugly day yesterday on the VIX, big bounce, volatile today as well. This is showing down 7%, but my quote screen shows that it's up 2.9%, something not quite right there. But the VIX is elevated. It's above 16. We don't want it above 16. That's another reason to be cautious. How about the dollar? Big bounce in the dollar over the prior 4 sessions, gave some of it back today. How did that correspond to precious metals, which have broken their uptrend line versus the 8-day moving average, which they were above for about 4 weeks, but holding on to the 21. That's GLD, GDX, gold stocks weaker, trying to hold on to the 50-day moving average, and silver uh, has broken both. Kind of silver looks more like the Nasdaq 100 than um, the gold and gold stock chart looks. How about IBIT, Bitcoin? Uh, Closed at the high of the range, looking like it's possibly a shakeout flat on the day. So it did rally later, but lack of relative strength below the declining 50, 21, and 8-day moving averages. On to bonds now. Bonds higher, up by 0.44%. Little handle on the broad bond index here, breaking above the downtrend line of that handle. Bonds are looking pretty good. That's the broad up bond index TLT. Same thing. Pulled back to the 21 day, now bouncing up 1.3%. If price is up, that means yields down. We did rally up 5 straight days on the yield, gave it all back in 2 days, down 2% on the 30 year and sorry, that's the 10 year. The 30 year, the long bond, the TYX down 1.55%. Same thing, 5-day rally, 2-day to engulf that 5-day rally. So rates continuing to fall. All right. That is our interasset correlation chart portion. Let's go to the tail of the tape and battling back and forth between the bull and the bear case right now. 10 a.m. jolts, fewer job openings than were expected. Initially, that was a harsh sell-off on the 5-minute chart, the 5-minute bar, but we rallied from that. We recovered from that quickly and rallied, like I said, till late morning before rolling over. Uh, the keys coming into today, S&P against the 21 and the 50-day. Well, the 21's acting as resistance, but we're holding the 50-day support. Did leaders bounce? They were mixed. NASDAQ 100 versus this 465 gap, we're below that level. 1 day down, we'll call it 1 day with a consolidation day. You need to hold the lows prior 2 days. 2 days below both the 8 and 21 EMA. These are all just little clues that tell us, should we be heavily invested in the market or shouldn't we? Big change yesterday. This was with Tuesday's action, first day of September. I asked the question on the August month end video, is seasonality going to impact us? And whether that's actually what it is, seasonality or not, it ain't good. It hasn't been for the last 2 days. So our expectations neutral, and that's neutral only if we stay above that 5,500 level on the S&P, NASDAQ 100 clearly on the bearish side. As far as the portfolio goes, we got rid of our hedge, booked our gains in that as we were pulling back to some reasonable support level on the NASDAQ 100. So our beta ticked up from 0.72 to 0.78. Keys for tomorrow. Again, we want to look at the S&P against the 21 and the 50-day and see if leaders continue to be supported. There are a couple that are, like I said, acting well. We'll look at the 21 briefly. But the bottom line on the day, gap down and choppy trade, but S&P supported again at, you guessed it, 5,500. Let's go to some individual stock charts. Now we're going to focus on the 21 over 21 list, and we're going to go through them sorted by how far above the 21-day, in this case, simple moving average they are. And we're looking to isolate strength when the market pulls back. 110, major support for Kava. Big gap up on big volume. The other note the group is a D. This is concerning. Other restaurants that were showing strength are really not showing strength anymore. But Kava, strong growth, big growth numbers for 2024, adding more stores. Uh, Arguably a ridiculous valuation per store, no question about it. But 110 is the line in the sand for Kava. And we own Kava. We own Race as well. Race with an undercut and reclaim of the 8-day up on a day like this. Relative strength line continues to trend higher. Number 3, Fortinet pulled back, bounced at the 8-day moving average, holding this Earnings gap and continuing to trend up. This is the exact behavior you want to see out of an earnings gap. Sideways for a little bit, then work its way higher and supported by the 8, as long as the 8 will support it while the relative strength line continues to rise. That checks all the boxes. We do not own it though. AppLovin bounced at the 21. Lilly, we own this sitting on the 8-day. SE bounced at the 21. Coherent broke the 21 yesterday, broke the 50 today, rallied into the declining 21. This is a frequent setup of a leader that's going to fail. Keep an eye on this. You break the 21, you find support at the 50, you have a bit of a shakeout, try to rally back up to the now declining 21, and you can't get back above it. That's the bears taking over. On the other hand, nothing's absolute in the market. It was up 3% today after an ugly day today. Volume yesterday wasn't astronomical. If we can get back above, it's in AI data center names were taken apart yesterday, and this is one of them. It's got the fundamentals, but the fundamentals frequently look best at the top. This is one we're definitely keeping an eye on, even though we got stopped out on it yesterday. We get back above the 21 and then the 8. Maybe it can regain its leadership price characteristics to go along with its leadership fundamental characteristics. ServiceNow holding the 21, failed breakout. Not surprising to see a failed breakout in this market. ITB holding on to the 21. That's a home builders ETF. Uber holding on to the 21. We have a position in this. Palantir stopped yesterday, undercut and reclaimed the 21 today. This is what I'm talking about, looking for positive signs in some of these leading stocks. So for now, this has put in a bottom. Sellers look worn out, but we're going to need market cooperation as well. Shift for payments to bad down days today, near average volume, but breaking the 21. Howmet undercut, reclaim the 21. DoorDash undercut, reclaim the 21. Axon undercut and reclaim the 21. Carvana, 2 closes below the 21. Spotify, we're getting into the worst of the remaining leaders. 2 closes below the 21, but holding the 50. Gold, multiple closes below the 21 and breaking the 50. IoT, 2 closes below the 21, but bounced at the 50-day. They've got earnings tomorrow. Upstart, after this is classic case of a change in character. We held this in the portfolio as long as it continued to rise above the 8-day moving average. Yesterday, massive change in character. You can see it on the chart. Breaks below the 8, the 8 rolls over, and now more distribution breaking below the 21. This is kind of how we handle these names is when you get the gap up, we look for an entry as soon as we can. We look for it to ride the 8-day. If it holds it for a couple of weeks, then we're using that as at least part of our stop. If the 21-day gets above our entry, we may hold a piece of it into the 21, but we didn't have a big enough size on this because it's volatile, so we sold it all before this hard break yesterday. So and now 2 heavy days down and not what you want to see. And finally, Transmedics, 2 terrible days, breaking the 21 and now breaking the 50, just like Upstart. Can't overstay your welcome in growth stocks. This is why William O'Neill took profits on most of his buys, between 20 and 25% from a proper pivot. If you don't get it right at the proper pivot, then you better be taking profits at 15-ish%. If you buy at 5% past the pivot and you try to hold out for that bigger gain, oftentimes these just reverse hard. You got a lot. You're best off to sell on the way up in growth names unless you're in an extremely strong one, and then you can hold it for the bigger move. And that's going to wrap it. As always, like to hear from you. The email's don@revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. I'll be on IBD Live this Friday. I believe that they have a trial subscription. If you want to listen, it is a pay service. Looking forward to my second appearance on there. And reminder, our flagship portfolio is named GROTECTION, dual mandate grow assets during uptrends, protect them as that trend starts to break, similar to how it did here. how it did here, and how it currently is here. You never know when that shorter term trend starts to break. Is it just going to be a mild correction right now where I think less than 3% off of the high on the S&P 500? And is it going to be 3%, 4 or 5, or is it going to be double digits? This was a shakeout 10% below the high. And you get defensive, stay neutral as long as we're above the 50-day moving average. Um, and you start to break that level and the moving average rolls over, the market simply is not in your favor at that point. Then you're looking for a follow through day to re-engage with the market, very similar to what I have flagged back here in November, which kicked off a very nice rally. And then we've had multiple corrections and subsequent follow through days since then. And that's what we do, is just look for, you want the wind to be at your back, not in your face. And with that, I'm going to wrap it for Wednesday, September 4th. Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.